What is happening, crypto fam? Welcome back to Bitcoin Bulletin, where we dive headfirst into the stories that are shaking up the digital asset world. The market is moving at lightning speed, and if you blink, you might miss the next big play. Today, we've got a packed show that you absolutely cannot afford to miss. We're talking about critical price levels being tested, major shifts in market dominance, and massive moves that could redefine your portfolio. Get ready, because the news is hot, and we're breaking it all down for you right now. First up, is Bitcoin's recent test of the $110,000 mark a golden opportunity to buy in, or a stark warning sign that bears are back in control? We'll dissect the charts and the sentiment to give you the clarity you need. Then, we'll explore how Bitcoin is acting as the ultimate barometer for global risk appetite, especially as the Federal Reserve walks a tightrope with its economic policies. What does this mean for your investments? Stick around to find out. Next, we're witnessing a seismic shift as altcoins are surging while Bitcoin appears to be taking a backseat. Is this the start of a new altcoin season, and what are the implications for the broader crypto landscape? We've got the deep dive on this paradigm shift. And finally, prepare yourselves for a shockwave. A massive $2.7 billion Bitcoin dump by a single whale has sent prices tumbling and wiped out millions in leveraged positions. We'll analyze the fallout and what it means for the immediate future. Don't go anywhere. Hit that subscribe button, ring the notification bell, and let's get into it. Bitcoin hits $110,000. Buy signal or sell warning. Bitcoin is currently in a critical phase, testing the significant $110,000 mark. This level is more than just a number. It's a crucial psychological and technical battleground that could dictate the short-term trajectory of the world's largest cryptocurrency. Investors and traders worldwide are scrutinizing this price point, trying to decipher whether it represents a prime buying opportunity or a bearish signal indicating a potential downturn. The question on everyone's mind is this a chance to accumulate more Bitcoin at a potentially advantageous price, or is it a warning that the market is heading for a correction, possibly signaling a bear market? The answer could significantly impact portfolio strategies in the coming weeks. This price test comes at a time when the broader market sentiment is mixed, with various indicators pointing in different directions. While some analysts highlight the resilience Bitcoin has shown in maintaining support above key moving averages, others point to macroeconomic headwinds and increasing regulatory scrutiny as potential dampening factors. The market's reaction to this $110,000 level will be closely watched, as it could set the tone for broader cryptocurrency market movements. Technically, the $110,000 level has acted as both support and resistance in recent history. A decisive break above it could signal a continuation of the bullish trend, potentially targeting higher all-time highs. Conversely, a failure to hold this level and a subsequent drop could lead to a retest of lower support zones, with significant implications for market sentiment and investor confidence. The volume accompanying these price movements will be crucial in confirming the strength of any breakout or breakdown. Furthermore, on-chain data, such as the behavior of long-term holders and the flow of funds into and out of exchanges, will provide additional context to help interpret whether this price action is a healthy consolidation or a sign of underlying weakness. The interplay between these technical, fundamental, and on-chain indicators will be vital in understanding whether the $110,000 test is a buying opportunity or a bearish warning. Looking at the broader market context, Bitcoin's performance is often seen as a bellwether for the entire digital asset space. Its ability to navigate these critical price levels and maintain its upward momentum, or conversely, its susceptibility to sharp declines, can influence investor confidence across a wide range of cryptocurrencies. The current market environment is characterized by a delicate balance between speculative enthusiasm and cautious risk management, making every price movement a subject of intense analysis. The outcome of this $110,000 test could provide a clearer picture of where the market is headed in the near term. But what does this all mean when you zoom out and look at the bigger economic picture? We'll dive into that next, and then we'll explore a major shift happening in the altcoin market. Bitcoin as the global risk appetite barometer, navigating the Fed's tightrope. In the intricate world of finance, Bitcoin has increasingly been viewed not just as a digital currency, but as a potent indicator of global risk appetite. Its price movements often mirror the collective sentiment of investors towards riskier assets, making it a unique barometer in today's complex economic landscape. This role becomes particularly pronounced when considering the actions of central banks, such as the U.S. Federal Reserve, which are currently navigating a delicate tightrope with their monetary policies. The Fed's decisions on interest rates, inflation control, and economic stimulus have far-reaching implications, and Bitcoin's reaction to these policies provides a real-time gauge of how global markets are perceiving economic stability and growth prospects. The Federal Reserve's current stance is crucial. As they attempt to balance inflation concerns with the need to support economic growth, their policy decisions create ripples across all asset classes. When the Fed signals a tightening of monetary policy, such as raising interest rates, it generally makes safer assets more attractive and can lead investors to divest from higher-risk assets like cryptocurrencies. Conversely, dovish policies, like quantitative easing or low interest rates, tend to encourage investment in riskier assets, potentially boosting Bitcoin's price. Therefore, understanding the Fed's communication and anticipated actions is paramount for anyone looking to interpret Bitcoin's market signals. This dynamic positions Bitcoin as a key indicator for understanding broader economic trends. For instance, if Bitcoin experiences a significant rally while the Fed is signaling a more accommodative stance, it suggests a strong global appetite for risk and confidence in future economic expansion. Conversely, a sharp downturn in Bitcoin's price during periods of Fed hawkishness could indicate widespread investor caution and a flight to safety. Analysts often study Bitcoin's correlation with traditional risk assets like tech stocks to confirm these trends. The correlation can strengthen or weaken depending on market conditions and investor psychology, adding another layer of complexity to its role as a barometer. Moreover, the increasing institutional adoption of Bitcoin further solidifies its position as a reflection of global risk sentiment. As more large financial institutions allocate capital to Bitcoin, its price becomes more sensitive to macroeconomic shifts and investor confidence in the broader financial system. This institutional involvement means that Bitcoin is no longer just a playground for retail speculators. It's an asset class that institutional investors use to express their views on the global economy. The flow of capital into and out of Bitcoin, often driven by macro events and central bank policies, provides valuable insights into the prevailing market mood. The challenge for investors and analysts lies in accurately interpreting these signals. Bitcoin's volatility means that its price can be influenced by a multitude of factors, including market sentiment, regulatory news, and technological developments, in addition to macroeconomic indicators. However, by closely monitoring the Fed's actions and understanding how they influence global liquidity and risk appetite, one can gain a more nuanced perspective on Bitcoin's movements and its role as a leading economic indicator. The interplay between monetary policy and digital asset markets continues to evolve, making Bitcoin an indispensable tool for navigating the complexities of the modern financial world. But what happens when the cornerstone of this entire digital asset world starts to show signs of shifting its dominance? We're seeing a fascinating trend emerge as altcoins begin to take center stage, and we've got all the details on this paradigm shift. The rise of altcoins as Bitcoin takes a backseat, a shifting paradigm in cryptocurrency. What happens when the cornerstone of cryptocurrency starts to wobble? In an astonishing turn of events, Bitcoin's once-iron grip on the market has loosened from 65% to a precarious 58%. This isn't just another drop in the statistics. It's the herald of a remarkable transformation towards altcoins, the underdogs of the digital currency realm. As this shift unfolds, investors keen on maximizing their returns must shift their focus to this burgeoning landscape filled with alternative assets eager for exploration. There was a time when Bitcoin stood solitary at the pinnacle, a perceived bastion of stability in a sea of volatility. However, the mighty has begun to falter, inviting scrutiny and speculation. The plummet from 65% dominance in May to 58% in August reveals more than market fluctuations. It indicates a palpable shift in investors' appetites. Many are now eyeing altcoins with renewed interest, eager to diversify their portfolios in search of new promising horizons where potential rewards lie. What's driving Bitcoin's retreat? The ascendancy of Ethereum and the spectacular rise of decentralized finance, DeFi, illustrate groundbreaking technological advancements that are pulling in significant institutional funds. Concurrently, the allure of AI-driven tokens and cryptocurrencies linked to gaming is capturing traders' imaginations, diverting attention from Bitcoin's erstwhile supremacy. This wave of diversification may hint at a broader narrative of increased risk tolerance among investors, signaling the onset of an altcoin renaissance. The ramifications of Bitcoin's fading dominance are nothing less than seismic. As it cedes ground, altcoin market capitalization has surged by a staggering 50%, reaching an eye-popping $1.4 trillion. In this transformative environment, altcoins are no longer passengers on this tumultuous ride. They are bold contenders reshaping growth expectations and instigating innovation. The rise in liquidity, spurred by macroeconomic shifts and clearer regulatory landscapes, further strengthens these alternative currencies, prompting institutions to rethink their strategies in these evolving waters. From a technical perspective, Bitcoin's diminishing dominance has established a newly critical battleground at the 58% mark. If it falters here, a descent to the historical 55% support level could be on the horizon, a threshold that has shown resilience in the past. Historical data consistently shows that Bitcoin's declines in dominance often coincide with a surge in altcoin activity, underscoring the importance of vigilance at these junctures. The future movements of the market are likely to revolve around these pivotal shifts, revealing fresh opportunities for astute investors ready to seize the moment. As Bitcoin's prominence declines, investment landscapes must evolve. This isn't merely a shift in focus toward altcoins. It's a call for the development of innovative liquidity solutions that bridge the gap between cryptocurrencies and traditional finance. Startups and decentralized organizations must navigate this complex terrain, harnessing the potential of altcoins while simultaneously managing the intricacies of fiat integration and regulatory compliance. Altcoin investment is no longer a gamble. For institutions willing to adapt, it's a gateway to substantial growth in an ever-changing cryptosphere. The erosion of Bitcoin's dominance signifies a key inflection point in the cryptocurrency market. As the landscape shifts, both investors and institutions must recalibrate their strategies to uncover emerging opportunities in the altcoin space. Understanding the currents driving these changes is essential for navigating this new market frontier. As altcoins continue to gain momentum, the established norms may be upended, cementing their role as vital assets in the portfolios of bold, forward-thinking investors. In this era of digital finance, embracing altcoins is not just advisable. It's a transformative leap towards capturing the future of investing. Now, we've seen Bitcoin's dominance shift, but what happens when a single massive transaction can send shockwaves through the entire market? We're talking about a whale dump of billions, and the fallout is intense. Stay with us for the full story. Bitcoin news today. A whale's 2.7B dump shatters Bitcoin's price floor. Bitcoin's price has faced renewed downward pressure as it fell below $110,000, following a large-scale offloading of 24,000 BTC by a single whale over the weekend. The transaction, valued at over $2.7 billion, sent shockwaves through the market, accelerating a sell-off that had already seen Bitcoin plunge from a peak of $117,000 to around $109,894. The move triggered widespread liquidations, with over $700 million in leveraged positions wiped out as the price dropped to as low as $108,890. Analysts and traders are closely watching whether this threshold will hold, or if further deterioration will push Bitcoin toward critical support levels below $100,000. Technical indicators are also flashing caution. The 100 EMA on the daily chart was recently breached, a development that historically signals a potential deeper correction. Cryptographic trader Cryptophic highlighted this as a key concern, warning that breaking below the 100 EMA could lead to a pullback toward $103,000. The 200-day SMA, a critical long-term support line, sits at just under $101,000. Should Bitcoin fall beneath this level, it could trigger a broader reassessment of the bull market narrative. Market sentiment, while not yet in fear territory, is shifting. The Bitcoin Fear and Greed Index, a widely followed sentiment tracker, currently stands at 48 out of 100, just above fear. This reading reflects growing unease among traders, but not yet a full-blown bearish reaction. Long-term holders, however, may find solace in historical data showing that Bitcoin has been profitable for 99.1% of its existence. That said, short-term holders, particularly those who bought within the past 6 months, face the risk of seeing their unrealized profits erode if Bitcoin fails to stabilize. Axel Adler Jr., a crypto analytics expert, pointed to the 100,000-107,000 range as a crucial support zone. This area overlaps with the short-term holders' cost basis and the 200-day SMA, making it a potential battleground for the next few weeks. If the price breaks below this level, the next line of defense lies between $92,000 and $93,000, territory where investors who held Bitcoin for 3 to 6 months are likely to feel the sting. Glassnode, a leading blockchain analytics firm, emphasized the importance of Bitcoin reclaiming the $110,800 level. This price point represents the average cost of recent investors who bought in during May through July when Bitcoin was hitting all-time highs. Failure to reassert control above this level could signal the start of a more sustained correction. Despite the recent sell-off, the Bitcoin network remains robust. The hash rate is approaching a new record high, currently at 909,080,589 TH/s, just shy of the previous peak of 1,084,828,947 TH/s. This suggests that miners and validators continue to support the network, even in the face of declining prices. However, market participants are also closely watching ETF inflows, as they have historically played a role in stabilizing Bitcoin during periods of volatility. Current data shows that Ethereum ETFs have outperformed Bitcoin ETFs in terms of inflows, signaling some level of capital rotation within the crypto space. Analysts remain divided on the immediate outlook. While some believe the price could rebound due to short covering at $114,000, others caution that the path of least resistance appears downward. BitBull, a prominent trader on X, suggested that downside liquidity has been largely exhausted, potentially setting the stage for a short squeeze in the coming days. However, this scenario remains speculative and contingent on broader macroeconomic factors. In summary, Bitcoin faces a critical juncture as it tests key support levels following a whale-driven sell-off. The coming weeks will likely determine whether the price can stabilize or if it will continue its descent toward the $100,000 level. Investors and traders are advised to remain cautious as market dynamics remain volatile and unpredictable. And that's a wrap on today's critical updates. We've covered Bitcoin's price test, its role as a global risk barometer, the altcoin surge, and that massive whale dump. Stay tuned for our quick recap and our call to action. All right, everyone, that was a whirlwind of crypto action. We saw Bitcoin testing $110,000, potentially a buying opportunity or a warning sign. We also looked at Bitcoin as a barometer for global risk appetite amidst Fed policy shifts. Then, we dove into the altcoin surge as Bitcoin's dominance wanes, and finally, the massive $2.7 billion whale dump that shook the market. If you got value from this, smash that like button, subscribe for more daily updates, hit the notification bell so you never miss a thing, and let us know your thoughts in the comments below. Follow us on all social platforms for real-time insights. We'll see you in the next one.